2010 was the year the inversion took place where central banks became net buyers. The buying is accelerating. Russia has quadrupled its gold reserves from 600, this is 15 years. Russia has gone from 600 tons to 3,000 tons. China, about the same, 600 tons to 3,000 tons that we know of, could be much more. But also Iran, Turkey, Philippines, Kazakhstan, Mexico, Vietnam, if you go down to India, even Japan somehow pulled 300 tons, probably in the back room, but we've restated their gold reserves from 600 tons to 900 tons. This is all by weight, by the way. I'm not talking about dollar valuations.
Jim Rickards, a seasoned lawyer and investment banker, has long championed the strategic importance of gold. Initially, he predicted that gold would rise to $15,000 per ounce. However, he has increased his forecast in response to current economic trends. This revised projection comes from an in-depth USM1 money supply analysis and the historical precedent of gold backing the dollar. Rickards highlights the $17.9 trillion USM1 money supply and applies a 40% gold backing ratio, reflecting the legal framework of the Federal Reserve from 1913 to 1946. This analysis suggests a need for $7.2 trillion in gold reserves, translating to a price of $27,533 per ounce based on the U.S. as 261.5 million troy ounces of gold holdings. Central banks have intensified their gold acquisitions, fueling unprecedented demand. Reports indicate that November 2024 saw central banks collectively adding 53 tons of gold to global official reserves, underscoring a sustained trend of strategic buying throughout the year. This accumulation is particularly pronounced among emerging market economies, driven by the quest for stability amid global economic uncertainties. According to Forbes, this buying spree marks the fastest pace in recent history, with central banks bolstering gold reserves to safeguard against volatile markets and shifting geopolitical dynamics. These developments have propelled gold prices higher, aligning with Rickards' forecasts. The ongoing gold rush aligns with broader geopolitical shifts, such as the Brics alliance's pursuit of alternative financial frameworks. While a unified Brics currency remains a distant ambition, member nations are advancing immediate solutions like the Brics Clear payment system. This innovative mechanism facilitates trade settlements in local currencies, bypassing the US dollar. By leveraging centralized ledgers maintained by central banks, Brics nations ensure efficient net settlements of trade imbalances. These measures reflect a strategic pivot toward greater financial sovereignty, reinforcing the critical role of gold as a hedge against economic and monetary disruptions. We present the clips of Jim Rickards' insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
So what did we do? Well, in the late 90s, we suckered the British into selling half their gold. They did at $250 an ounce, by the way. That was Gordon Brown was the Chancellor of the Exchequer. It's known as Brown's bottom, but he did manage to sell the gold at the absolute. That's like a 60-year bottom. So nice job, Gordon Brown. Then in the early 2000s, we put pressure on the Swiss, and the Swiss sold 1,000 metric tons between 2000 and 2009. Finally, the Swiss rose up in a peaceful revolt and had a referendum, and the Swiss National Bank said, no mas, no mas, we're not selling any more gold, and they haven't. And we got the IMF to sell, I think, 400 tons in 2010. That's it. No more suckers. And so 2010 was the year the inversion took place where central banks became net buyers. And they've been net buyers ever since. And the buying is accelerating. Russia has quadrupled its gold reserves from 600, this is 15 years. Russia has gone from 600 tons to 3,000 tons. China, about the same, 600 tons to 3,000 tons that we know of, could be much more. But also Iran, Turkey, Philippines, Kazakhstan, Mexico, Vietnam, if you go down to India, even Japan somehow pulled 300 tons, probably in the back room, but we've restated their gold reserves from 600 tons to 900 tons. This is all by weight, by the way. I'm not talking about dollar valuations. So what that does, if you're an investor, it's my favorite kind of trade. It's called an asymmetric trade. You have a kind of floor, no guarantee. But if central banks are buyers and continual buyers, and they don't try to gobble up all the gold in the world at once, the market's very liquid, but not that liquid. Russia is a good example. 10 tons a month, 20 tons a month. It's a little engine that could, but you do that for 15 years and you're going to get thousands of tons. But they kind of put a floor under things, which means you can buy. It doesn't go up the next day, but if the trend is up and there's a floor that keeps it from going down because the central banks come in and maintain the floor, that's a beautiful thing. And so that's one trend. Now the Brics have accelerated that because they are in the process of they're doing a couple of things at once. They're coming up with their own currency, but very slowly. We might not see that for 10 years. And people say, well, they can't do it and all that. Well, I remind them that the Maastricht Treaty was signed in 1992 and the euro was not available until 2000. The point being, that will take a while. But what is not taking a while, what is happening in real time and a lot more progress at the Brics Leaders Summit in Kazan, Russian Federation, that just took place a little over a month ago, is they've come up with their own payment system. And they're going to use their own currencies transacting in a closed circuit, meaning secure payment system. So Russia will ship energy to China and get paid in yuan, and yuan will China will ship manufactured goods to Brazil and get paid in rice. And if you want to buy, if India wants to buy Embraer aircraft, et cetera, they'll pay in rupees. So there'll be all these do tos and do froms. The way you handle it in the real world is you keep a ledger. Now the central bank comes in and pays all the sellers in local currency. And then they absorb the due from the trading partner on a central bank ledger. That's what this, it's called Brics Clear. That's what this system will maintain. But the thing is you can settle up on a net basis, not a gross basis. You don't have to settle up in real time. You can, but you can settle up quarterly, let's say. So a quarterly net settlement is not that onerous. And how can you do that? Gold. In other words, if in the absence of your own currency, your own Brics currency, which is some years away, you can use gold as the coin of the realm, so to speak. And you can move it. You just put it on a plane and fly it around, but you don't have to. Again, as long as you have a ledger, I'll say, well, I'll clear all my debts to you in gold by weight. And you can measure it in yuan or rubles or anything else. And it was interesting to note that along with this Brics Clear system I just described, they're coming up with a commodities exchange. Again, it's all non-dollar denominated. There are no dollars in this whole system, but gold plays a very significant role because it is the only common currency of the now at the moment 9 members.
Jim Rickards emphasizes that gold has become the BRICS Alliance's unofficial common currency, bypassing the complexities of introducing a formal monetary unit. This strategy is anchored by creating an encrypted digital ledger, enabling trade settlements in local currencies while maintaining gold as the backbone for stability and trust. Rickards suggests that this approach reflects a strategic pivot by emerging markets to reduce reliance on the US dollar and assert greater economic independence in a rapidly evolving financial landscape. Drawing on history, Rickards highlights the parallels between the gradual decline of the British pound as the dominant global reserve currency and the current trajectory of the US dollar. While the pound's fall was spread across decades, beginning with World War I and culminating at Bretton Woods in 1944, the dollar's share of global reserves has steadily dropped from 70% in 2000 to 59% today. Rickards argues that the ongoing shift toward de-dollarization, fueled by countries like China, Russia, and India, opting for local currencies in trade, could accelerate with the advent of a BRICS currency or similar frameworks. This shift challenges U.S. economic dominance and hints at a broader realignment of global financial power.
You just have to understand the monetary system. If it's not gold, what is it? And as far as the is there an aha moment, or what some economists call a Minsky moment, when, all of a sudden there's a, repudiation of the dollar, everyone's dumping U.S. Treasury securities. You don't need that. What happened, I think a better case study is sterling. So in 1913, sterling was the undisputed global reserve currency. Gold was actually money at the time. You might have some Bank of England notes. That's convenient, but you could just as easily carry a purse full of sovereigns, a quarter ounce British gold coins. And no one doubted that. But beginning with World War I, you could almost pin or pick the beginning of the demise of sterling. It was November 1914. Of course, the war started in end of July, early days of August 1914. But initially, the UK, and actually all the belligerent powers, so it's true Germany, Belgium, France, didn't matter what side you were on, they were all dumping U.S. securities, selling stocks. They actually closed. The New York Stock Exchange was closed from August to December 1914. If people say that can't happen, I was like, well, it did happen, because people were just dumping stocks, real estate, but they were getting gold, shipping the gold to Europe so they could have it in their vaults because they knew they would need it to fight the war. And actually, when the German submarine attacks got too dangerous, the Bank of England opened a branch in Canada, and New York bankers sent whatever gold the British had earned by selling securities. It was sent by train from New York to Toronto. Might have been Ottawa, but in any case, it was in Canada, and they stored it there so they didn't have to move it across the ocean. So, but then it was all downhill for sterling from there, because once they got the gold, they had to use it to buy, weapons, ammunition, clothing, agricultural output, supplies, etc., much of which they bought from the United States. So we sent them all the gold because it was theirs, but then we got it all back because they needed it to finance the war. And that was the beginning of the end of sterling. Now, it didn't completely get buried, didn't put the last nail in the coffin until Bretton Woods in 1944. Sterling's still a reserve currency today, but it's about 3 or 4% of global reserves. It's not a big slice. But the point being, that happened over 30 years. It didn't happen overnight, but the trends were in place, and you pay attention to the trends. So I would say the move away from the dollar has already started. It doesn't have to be dramatic, and it doesn't have to take 30 years. The fact is, it's in train, it's happening, and it's a good reason to have gold. Well, yeah, China still has over $1 trillion of U.S. Treasury securities, so it's not in their interest to trash the dollar. And Russia, has some hope of getting theirs back once we have a peace with, the ceasefire peace treaty with Ukraine. And again, that is what happens. We froze Iranian assets in 1979 at the time of the hostage crisis, and then kept freezing them and kept sanctions. But eventually, Biden basically gave them all their money back. So these things have a way of working out. But if you saw, just in recent times, in 2000, the U.S. was 70% of global reserves. Well, global reserves were denominated in U.S. dollars. You don't have stacks of $100 bills in the basement of the central bank. You have U.S. Treasury securities. But using the dollar as a numeraire, in 2000, it was 70% of global reserves. Today, that number is 59. U.S., the dollar and the euro together, they're 85% of global reserves. And then there's 7 or 8 other countries, Aussie dollars and Swiss francs and sterling and yen and the kind of yuan. Even they have small slices of the remaining 15%. So you don't have to trash the dollar. If that number certainly falls below 50%, I think 50% is one of those critical thresholds where the perception changes. Like economically, going from 50 to 49 is not the end of the world, but psychologically it may be in some sense. And then the Brics will come along and take their share. So it's more. I think it's important to understand the dynamics. But if I'm saying, the Brics currency will come along in due course, it'll grow, the dollar will shrink, the euro will shrink, et cetera. What's constant? What's the common denominator? It's gold.
Let's move to the recent US election, because I'm very curious what you have to say about what Trump's influence on all this is going to be, especially the fact that the US under Biden has basically used this weapon of the US dollar. It was one thing to have the threat. They've gone and used it. It's activated this move away from the dollar. What's Trump going to do? Is he going to try and shoot the same gun twice? Does he understand that it's probably not a great idea?
Right.
I find him very unpredictable. You're very good at predicting what he's up to. So tell us what his administration is going to do about these sorts of things.
Sure. Well, a few things are more obnoxious than patting yourself on the back, but if I could just drop a footnote, our flagship newsletter, Strategic Intelligence, came out at the end of October, and we said Trump and Vance were going to win. We said Trump would get 312 electoral votes, would get 54 Senate seats, and 224 seats in the House of Representatives for the Republicans. The actual numbers were 312, so a near perfect forecast. It was the best forecast out there. You had big names like Nate Silver saying, yeah, too close to call. And what good is that, Nate? I mean, you're just, you're throwing up your hands. New York Times, Economist, actually the Economist had Kamala Harris winning. So much for that. And a lot of them were just too close to call. But we were categorical, and we completely nailed the metrics. And the only reason I mention that is because we have a model. I mean, I didn't just, pull numbers out of a hat. We had a model which performed very well. It looks at polls. I'm not a pollster. I'm an analyst. We look at polls, but that's just one input among many that we use to get those kind of results. So I think our track record speaks for itself. Much easier to predict what Trump's economic plan is going to be because he's been very transparent about it. If you know Robert Lighthizer and Peter Navarro and Donald Trump and Scott Bessent is a new name, but could well be our Secretary of the Treasury. It hasn't been announced as of the time we're doing this interview. They've all said what they're going to do. We're going to put high tariffs on major trading partners, particularly China.
The U.S. Treasury may be driven to strategically purchase gold as a safeguard against central banks worldwide reducing their dollar reserves in favor of gold. This shift could help stabilize the dollar's value and prevent long-term depreciation, ensuring its continued role as a global reserve currency. By increasing its gold holdings, the Treasury could restore confidence in the dollar, reinforcing its perceived reliability and intrinsic value. Such a move would likely push gold prices higher in dollar terms, but the advantages, strengthening the dollar and maintaining its global standing, could far outweigh any drawbacks. Gold may emerge as the ultimate safe haven in an uncertain global economy, offering stability and resilience in a shifting monetary landscape. Do you think the increasing gold reserves and moves by Brics to bypass the US dollar could mark the beginning of a shift in global financial power? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos.